Hey guys, hope you're well. So I'm just going to do a full review of all the setups that took place between Monday the 24th of July up until Friday the 28th of July. So going into obviously the new week, right? What we saw the previous week was that price had given a move to the downside, completing a very retract trap around the monthly as well as the weekly imbalance. So this is a bit of a confirmation that we could anticipate further bearishness into the next year on sell side, or the market could simply accumulate before a potential bullish continuation. Now, on the daily time frame, what we can see is the price is delivered on um, just over 5 days of bearishness. So therefore, in the same way as the previous week, because we've seen multiple days of price falling into a high volume area, such as this daily imbalance, we can anticipate for price to give some sort of a bullish correction. But again, we do need to trade in line with our 4-hour as well as our 1-hour bias. Now, on the 4-hour time frame, just before the European Open, we can see the price has obviously delivered on. So again, just to make this a little more visible, price had basically delivered on 3 bearish expansions with an extension of that third leg. So at this point onwards, obviously our AOI is so this is our accumulatory range. So we're either looking to be selling from below the low of the range, or we're looking to be buying after price is broken outside of the high of the range. Okay. So if we go down to the 1-hour time frame, again, just to contextualize our setups in terms of what we're looking for, we can see on the 1-hour time frame, the price is also given a partial reversal the following Friday and giving us a bearish reset. So we've seen 2 bearish expansions to the downside. So on the 1-hour time frame, our bias seems to be bearish. Okay. So therefore, what we do want to do is we want to look for an opportunity to trade in line with this potential bearish bias, because then what could happen is price could give bearishness towards the low, which should obviously complete that third accumulation before we do see a potential bullish shift to the upside. So taking a look at a 15 minutes time frame, because obviously we want to be seeking to trade in line with a potential bearish continuation on the 1-hour. We can see that price has obviously given us a bullish break. So this is a bullish trap. And then later on, we had a bullish break outside of our Asian range. So our AOI, because again, we're looking to for potential bearishness, we're either going to be looking to trade a 5 minutes confirmation short. So BRR5 or BRR15, right? Or BRR1. But we have 2 criteria that needs to be met. The first criteria is for price to trade into the order block. And the second criteria is for price to take out either the H1 SST or the H1 PST. Okay. So we can see that price takes out the H1 BST during the London Open, but obviously we see a very aggressive break to the downside just below the order block. We can see that obviously that created a 5-minute break of market structure right here. So this is a 5-minute secondary break of market structure. Okay. Not secondary, sorry, a 5-minute classical break of market structure. The price is delivered and then retested and giving us that second leg. Whereas if we take a look on the 15 minutes time frame, what we're looking at is a classical 5 minutes break of market structure. So obviously, our area of interest is to enter at the 5 minutes breaker. So our order block becomes a breaker, and now we're interested for price to essentially trade into this breaker. And from that breaker, we're seeking a 1 minute confirmation to go short. Okay. But obviously what happens is the price obviously hangs around for a bit, doesn't quite trade into that breaker. And then going into the London Open, going into just before the New York Open, the price trades a little bit higher. So at the end of our session, there isn't really any opportunity for us to engage in because price failed to trade into our AOI at the 15 minutes breaker, which is where we would have been looking to take a 1 minute confirmation short, with the first target obviously being a recent low and the secondary target being the H4 SST. So London Open on Monday, there wasn't any setup for pound dollar. So now let's go into Tuesday. Okay. So going into Tuesday, obviously our area of interest is still the same. Next true on sell side is the swing low down here, and next true on buy side is this imbalance up here. We've also seen that on Monday, price has given us what seems to be obviously is a contraction candle. There's a bullish contraction candle. So it does look like price is about to give us that bullish reversal to the upside. So if we take a look on the 4-hour time frame, just to contextualize what's going on, right? We can see that price is still within that level 3 accumulatory range, right? We can see the price obviously, so next year on sell side just before the London Open is the swing low, next year on buy side is the swing high right here. So we're either looking to be buying from the sell side target, or we're looking to be waiting for price to break above the sell side, and then we're looking to buy after that break above. If we take a look on the 1-hour time frame, again, just before the European Open, right there. Right, so just seeing where price is, we can see the price on the pound dollar has delivered that third bearish expansion to the downside, right? And at this point, we're now interested, obviously, in a bullish reversal. So the range of interest is, of course, going to be, so if you just look at all of this, is very, very accumulative, right? But our level 3 range, of course, we have this initial low, we have this initial high. If we expand it, all of this is cumulative activity onto price gives us that final bullish break outside of this range. So at this moment in time, of course, we're either going to be interested in buying into that first expansion, right? Or we're going to be waiting for price to deliver the first expansion, and then we're going to be looking to trade a continuation thereafter. Now, if we take a look at the 15 minutes time frame, right, what we can clearly see is price has been accumulating for a period of time. So just before the London Open, what we do want to see is for price to give us a bullish break, which it does, right? So bullish break outside of the range. Now, this is interesting, right? Because again, price hasn't yet given us a bullish expansion. So if price is accumulating, right, you want to be selling, looking to sell from the high of the accumulatory range until you get a confirmed break, or you want to be looking to buy from the low of an accumulatory range. So at this point onwards, of course, we have a bullish break outside of the range. Price is taking out the H1 BST. Our area of interest is, of course, going to be this bullish order block right here. So we need to have an open mind to also be selling, right? Because again, remember, price has taken out the high of an accumulatory range, right, within that level 3. So price could easily give us sell confirmation to the downside. Okay. Now, it is important to note that obviously price had already given us that bullish break right here in the European Open. So although this candle is a bearish candle, it doesn't close back into the range. So this is a bullish break, right? This is the order block responsible for that break. This candle had retested that bullish order block, and after that, price had taken out the H1 BST. So I believe the best possible scenario in this is to trade a BRR1, so break, retest, reversal, 1-minute variation where price would break, retest, takes out the recent high, and then I'll be looking to trade that 1-minute confirmation to the downside. So in this scenario, obviously what I'm looking for now is a 1-minute confirmation to sell, right? So during the London Open, after price obviously takes out the recent high, I'm looking for a 1-minute break of market structure. Okay, you can see the price, oops, just get rid of that. We can see the price obviously delivers right here a 1-minute secondary break of market structure right there. So our area of interest is to enter at the imbalance that was created with our stop loss going 5 pips above the recent high. Right, so short position at the imbalance, stop 5 pips above the high. And then what we're seeking is to obviously sell into one of two things, right? So the first target we could sell into is our bullish order block below. So we could anticipate price to trade below the bullish order block. And obviously we have the 800 EMA on the 1-minute time frame. So I'm just going to adjust my entry a little bit, which is what I would usually do in real time to ensure that I can get a 1 to 2 to the next reasonable drawn liquidity. And then a secondary target, of course, should be the H1 imbalance below. So the H1 imbalance would act as a secondary area that price could trade into, and the first area of interest would be the bearish order block. So we can see here that what happens is price trades into our entry confirmation, right? So obviously that 5 pip stop is important, crucial to stay in the trade, and thereafter price obviously proceeds to give a bearish continuation to the downside. Now, the first target at the bearish order block was triggered, and then afterwards, obviously, price bounced back and eventually traded into that second target at the H4 at the 1 hour imbalance just after the New York Open. Okay, so that was the setup on Monday. It was a big break retest reversal from the H1 buy side target down into the bullish order block and the H1 sell side target below. So going into Tuesday, we'd seen that Monday price had delivered in the end a bullish session. So we'd seen obviously a contraction on Monday, a bullish session on Tuesday, confirming that we are now within obviously a bullish cycle. We can now anticipate a potential bullish continuation into this daily imbalance above. So going down to the 4-hour time frame, so again, just before the New York Open, we can see very clearly that price had delivered a first bullish expansive leg on the 4-hour time frame, confirming the beginning of a bullish bias. And then, of course, our next drawn sell side is this imbalance below, with the next drawn buy side being the swing high. If we go down to the 1-hour time frame, again, we can see very clearly. So again, just to forward play this twice. Okay. We can see very clearly that price had obviously delivered that first bullish expansion, contracted into that imbalance, which is obviously the shorts that we traded, and then second bullish expansion, and then obviously now that third bullish expansion to the upside. We can see that the market obviously is now contracted. So we have, remember the 4-hour time frame is obviously bullish because we are in the first bullish expansion. So therefore, this is a reversal. We can anticipate that price would give a partial reversal before a potential bullish reset. Now, next drawn buy side is the swing high. Next drawn sell side is the swing low down here. And we go down to the 15 minutes time frame. Right, what we can clearly see is that price, obviously, we have our Asian range has been defined. Right, we can see the price has given us a bullish break outside of the Asian range into that outside of a bullish order block. So AOI we're seeking to buy from the bullish order block, but it's important that price takes out either the BST or the SST first. So you can see price trades into the order block, but also takes out the H1 SST. So at this point, what I'm interested in seeing is now a 1 minute break of market structure to go long. Okay, so we have obviously our recent low, right? We have price creates an intermediate high, right? Creates an imbalance after that intermediate high right there. Stop loss goes 5 pips below the low, right there. Right, so we're seeking to go long from the imbalance. Stop goes 5 pips below the low. And then, of course, the first target must be either the recent high, or we could aim for that H4 BST, which is just around where the recent high is. And we can also get a 1 to 2 there, right? And then our secondary target, let's get rid of that. So if we go down to the 15 minutes time frame, again, we're just looking and seeking to see where price could potentially trade into. Obviously, we're looking at other unmitigated zones. We're looking at short-term highs right there. So you can see there's a short-term high that price could potentially trade into right here. So that short-term high would be my secondary profit target, profit-taking objective. Okay. So if we go back down to the 1 minute time frame just to see how this plays out. So obviously we traded this as a break retest continuation scenario, right? Price trades into that imbalance, right? Which is where it triggers our entry, takes out the first target at the H1 and H4 BST, right? At this point, you can move your stop loss to break even to protect your bottom line. And then obviously price accumulates for a bit and then trades into that secondary profit target before accumulating for a period of time. So that is the setup that took place on Wednesday. It was a break retest continuation in line, of course, with our bullish 4-hour bias, and the 1-hour time frame obviously gave that bullish reset to the upside, right? So obviously 4-hour time frame, we can see that price gave that bullish continuation to the upside as well. So let's go now on to Thursday. So going into Thursday, we've seen prices giving 2 consecutive sessions of rise after a session of contraction. We can anticipate price to potentially give a bullish continuation into this imbalance. And then, of course, our next draw on sell side liquidity at the close of this candle is this bearish imbalance down here. Okay, so going down to the 4-hour time frame, right? Just before the European Open, what we're interested in seeing is where price is. So we can see that price has delivered 2 bullish expansions to the upside. So it's the beginning of a bullish cycle, well, towards the end of a bullish cycle. So we can anticipate a bullish continuation into the next run H4 buy side target, which is this imbalance. And then, of course, the next run sell side is, of course, the swing low down here. Going down to the 1-hour time frame. Again, just taking this to just before the European Open. Right, we can see that price has delivered on the 1-hour a bullish reset. So we have number 1, bullish expansion, the market contracted, secondary expansion, and all of this is price trading within secondary expansion. So what I'm anticipating again on the 1-hour is again either bullishness into this H1 BST and H4 BST above, or we could anticipate a potential reversal from above the H1 BST. So going down to the 15 minutes time frame. So we can see that price has created a bearish break outside of this initial Asian range. Obviously, our order block is going to be our area of interest. So going into London Open, we want to see 2 things. We do want to see price obviously trade into that H1 SST, and we do want to see price trade into that bullish order block. So the second opportunity that could have presented itself here, because obviously price has traded into the order block and it traded into the H1 SST, is a break retest reversal, BRR 5 minutes variation. So we can see a classical break of market structure on the 5 minutes time frame with a breaker right there. So we can anticipate for price to retest the breaker, and then we take a 1 minute confirmation long, right? But obviously what we see in this case is that price keeps on rallying, right? Trades into that 4-hour imbalance without retesting that 5 minutes bullish order block. And also price fails to obviously trade back down after trading into the order block. So it completely invalidates a 5 minutes BRR and completely invalidates a BRC to the upside, right? So in this case, on Thursday, right, there was no setup that would have been in line with either a BRR or a BRC confirmation before the end of our trading session, okay? So that was on Thursday's trading session. So now let's go into Friday. So going into Friday, of course, AOI is now still going to be this imbalance right here. We can see prices delivered a move into that imbalance and then proceeded to trade back down to take out the recent low, as well as this imbalance on the sell side. So it's traded from buy side to sell side on Thursday. So because this is obviously a big move to the downside, we can anticipate this either being a reset or price simply swiping for sell side liquidity before a potential bullish continuation to the upside. Now, the next draw on buy side liquidity is going to, of course, be this imbalance still, but a little bit smaller. And the next draw on sell side liquidity is going to still be this swing low down here. Now, on the 4-hour time frame, again, just forward playing this twice, we can see the price gave a very massive move to the downside, with, of course, this being the initial expansion. So we could call this, because we've received 3 bullish expansions, this is a full bearish reversal coming back down. So again, what I'm anticipating is a potential reset continuation. Next draw on buy side is, of course, this imbalance, and next draw on sell side is going to be this swing low down here. Okay. Going down to the 1-hour time frame, just to keep this super simple. Right, we've seen on the 1-hour prices delivered on 2 bearish expansions. Again, this is a full reversal relative to this initial bullish cycle. So therefore, what I will be anticipating is a potential bullish reset. So 15 minutes time frame, we're now interested to see what kind of opportunity did we get. We can see that price is obviously giving us a bearish break outside of the range. We can see price traded into that H1 BST. So what I'm interested in, and this is a setup that I personally took, was this being a 5 minutes BRR, okay? So of course, 5 minutes BRR, our area of interest is the last down close candle on the 5 minutes time frame. We can see that obviously price gave this initial move to the upside and then contracted, right? And then gave a secondary move, but this is where price essentially broke market structure, classical break of market structure, right? And traded into that H1 imbalance. We can see that eventually price obviously traded into the AOI. So the AOI for me, let's go back there. Sorry about that. Right, so the AOI for me was just this general down close candle, this general area, because this is essentially a bullish order block. So price traded into the AOI, and then on the 1 minute time frame after price traded into the AOI, I was simply looking for a 1 minute confirmation to go long. Okay, there we go. So you can see that price gave a secondary break of market structure, AOI being the imbalance, right? And then of course stop loss going 5 pips below the low. There we go. And then of course seeking to go long with the first target objective being the recent high. And then a reasonable secondary target for me in this case was the H4 imbalance just above. Okay, price trades into that imbalance, right? And then proceeds to give that bullishness into that recent high. And eventually price trades into fill that 4-hour imbalance that was residing above, hitting the secondary target. So that was Friday's setup. So Friday was a 5 minutes BRR, which obviously made sense after Thursday's move, trade taking out the low of the range. And the next reasonable move was to have traded a bullish reversal for price to trade back into an area of buy side liquidity. So that sums up my overview of the setups that took place between Monday the 24th to Friday the 28th of July. I hope this helps. And yeah, if any questions, feel free to obviously drop me a message and let me know. Okay, wishing you all the best.